the Ocean Startup Project has been at this for 2 years now, and I can tell you that we are seeing really massive momentum in the ocean startup ecosystem, which is really exciting. We're getting inbound messages into this project all the time from emerging innovators across this country, asking for support, ideas, and connections. And there's really, we feel, something special happening right now in the ocean sector. And that is why project is expanding to British Columbia and Quebec. And we're putting 3 new FTEs in those regions to really try and support more enthusiasm, more interest, more awareness in the ocean sector. And so if you know people out there who are thinking about starting an ocean company or have ideas, please put them in touch with us. That's what we're here for. We want to really help generate more ocean startup companies and more ocean entrepreneurs. So that leads me to today. So, as I said, proven market interest is essential for early stage founders. And so we went out and we tried to find an organization to partner with that really understands this and has a track record for success in that regard. So Alacrity Canada is out of Victoria and is a leader in the incubation and acceleration space, particularly in clean tech. They've brought forward 3 companies and founders today that have relevant and timely experience in this very topic. We believe there is no better learning for early stage entrepreneurs than peer-to-peer in so many instances. So as you're listening today, please add your questions in the chat. We're going to have time for questions from the audience later. And also, please take a moment to introduce yourselves in the chat as well. And now I'm going to just turn it over to Peter Vandergraat, who is a senior mentor for Alacrity Canada's Clean Tech program. I gather Peter is a bit of a legend. I haven't had the pleasure of working with him, but I understand he works closely with in-market advisors and clean tech companies pursuing opportunities in India and Northern European markets and all over Canada. Peter's got a master's in electrical engineering and applied sciences, and is really, I gather, and I think we're going to find out today, a powerful resource for clean tech companies in their development. And what I say often, Peter, is that blue tech is clean tech as well. It's an emerging space, blue tech, but clean tech and blue tech are very much aligned in their foundation. So, Peter, I'm going to turn it over to you to chat and introduce these great founders who are going to chat today.
Okay, well, thank you, Donald. Those are I'm a little embarrassed after that. But by the way, in terms of blue tech, I'm a huge investor and believer in blue tech. I'm chairman of 2 blue tech companies, so I'm completely in agreement there. There is some fantastic things happening. I'm so glad that your organization is helping those early stage I call them ocean tech companies, prosper. I think we certainly need everything you're doing. I thought I would maybe just spend a minute quickly talking about Alacrity before introducing the panelists. So the Alacrity Canada really started off as a company creator. We have created or invested in 12 companies over the years, right from scratch. So we understand the pain of customer discovery very well. We've had 3 exits now from that fund, so we're very pleased with how that's worked out. And generally speaking, we're here to help technology companies commercialize. We have a variety beyond the fund. We have a startup visa program to allow talented entrepreneurs to come to Canada. We have about a dozen international offices in various markets around the world to help find opportunities for Canada's technology companies. As Donald said, we have a big focus in clean tech, which really everybody does these days. We have a variety of educational programs, digital boot camp, launch online programs that have been delivered to thousands of students in Canada. And we also administer a variety of different programs, for example, a plastics recycling one. So we're sort of kicking around the technology ecosystem with the goal of really helping our clients prosper. So we're very pleased with what we've been up to, and we're super pleased to help moderate and be involved in this event. And in particular, we've got three great entrepreneurs who I think are really going to help all the audience understand the challenges. I mean, it sounds like customer discovery should be an easy thing. You walk up to somebody and say, "What are your problems, and what are they worth to solve?" But it's much easier said than done. So we have Jayesh and Paige and Bill that are going to join us, and we have, from a process perspective, we have. Quite a few questions. I have about a dozen questions, and there's three excellent panelists and only 40 minutes. So what I'm going to do is, normally what we would do is I would ask the question and go around for all three, but I think what I'm going to do this time is just pick on one at a time and go through them. And then depending on the other panelists, if they have something additional to add, they can feel free to jump in. And then we're going to have sort of an open Q&A session at the end. And then this, as Donald said, there's going to be some meet and greets. So we'll kick this off. And again, thank you, panelists. I think this is going to be a very exciting session. So, the theme is proven market interest. And, that's different for every company because it depends on your product or market. And so what I'd like is maybe, Jayesh, I'll pick on you first, and then Paige, you second, and then Bill, you third. Think back to when you were starting your company and you were faced with this. Can you just sort of, talk to us about the very earliest days of starting your company and doing that product discovery exercise?
Sure. I did my MBA in entrepreneurship at University of Victoria, and so I was fortunate to come across like many startup ideas and the projects, and like half of my classmates were like going through this discovery stage at that time. So learn a lot. Let's stick to like how I got started. Johnny is in the pediatric care space, so we solve a problem for people with menstruation. And it's not easy for a male to go out and talk to all female audience and transgender audience to their menstruation. And the initial rejection that I would get is, we don't talk about erectile dysfunction. Why the hell are you talking about menstruation? We can solve our problem. We don't need you. Like, it's not as easy as like you go out and ask about their problem and they'll be like immediate, like, yes, you are interested in solving my problem. Let's talk about it. It would be easier if that's the case. When like there is a founder and industry fit, it's usually the case that it's easy to go out and just talk with the audience and like get the feedback about like, hey, talk to me about your problems and stuff, right? That being said, it takes time. Like for me, it was about like 7 or 8 first interviews, going out and talking to people and understanding their thought process. And after a few interviews, I started to resonate with them, and they started to open up more about the problems that they were facing and how I could solve the problem, and whether my product that I was pitching was the right product to get started with. So that's my early days, I think, like starting to understand your audience, not just their problem, but like empathizing with your customer and starting to resonate with them, so they open up and they discuss more, not just about the problem, but like overall day and the like time and everything. And then you start to figure out that problem, that yes, here is the problem that exists and here is how I might be able to solve it. So for example, for us, the problem was one. Initially, the idea was talking to a very niche persona who has very sensitive skin and has heavy eczema or UTI infections and can't use traditional plastic pads, and solving that problem with bamboo or organic material and building like a softer product for them. And finding these people is not easy because they are like very niche, and I can't go out and like, hey, do you get UTI? Do you get eczema? How sensitive your vaginal skin? Like it's not as easy as it sounds, but eventually, like when you have that trust factor in it and they start to believe in you after a couple of meetings, then they open up and you can discuss those things. And when we came up with the product, I went out and started to show this product to those people that I talked in early days. I went out and talked to a few pharmacies, and I was asking about like, hey, here is the product. We don't have packaging or anything around it, but would you keep this product on your shelves? Will it sell? What do you think? And usually pharmacist or pharmacy manager or the people in the background, they will be like, yeah, seems like a good product, but the packaging needs to be this way, or this needs to be changed, or the like this information needs to be highlighted on the product in order to make it like competitive, or the packaging has to be used in this material, the product has to be improved in these areas, and you do those couple of changes here and there, and boom, I think you have few early users from your interviews and the discussions, and like couple of buyers from pharmacies and stores that you have been talking all over the process. And when you have like a early sample batch, you can just go to them and just ask them to try and like, buy. Yeah, that's pretty much it. I would say like building trust is really important, and then jumping into problem rather than directly jumping into problem.
Yeah, thanks for that, Jayesh. I mean, I really wanted to lead with you with that question because you have a challenging product for customer discovery. And Paige, I'm going to shift to you next because I'll do a bit of a follow-on. So, as Jayesh mentioned, you really have to develop trust with these early customer adopters or influencers. I mean, you just can't walk up to somebody on the street and say, "Hey, tell me about your relationship problems," and so I can help solve them. They'll tell you to get lost. So Paige, maybe you could talk about how, I mean, if you're new to an industry, how do you develop that trust? How do you break that barrier? Because that's, until you have trust, you're not going to get the answers you're looking for.
Yeah, thank you, Peter. And, as Jayesh mentioned, it's, really advantageous if you yourself have an understanding of, the industry problem and pain point that you're trying to solve. And so, even before going into customer discovery, like depending where you are at, in your career and where you're at with your idea, I'd highly recommend getting some, industry experience, maybe even doing, a small like project with a company, anything that you can do to really understand like your clientele. But I know most people here are probably further beyond and further past that and are actually working on their startups. And so, I mean, part of that, one thing that we did really early was just put up a website and make sure that our keywords were really specific to the industries and search terms that we thought. So we actually got some really incredible like inbound leads just by having a website up. And so we started then to talk with potential clients that actually were seeking the problem that we were solving right off the bat. So I really would recommend that even if you don't have a product, at least you can get their email, you can add that to your list, and you can ask them some questions about, why they found you, how they found you, for example. After that, the number one thing that's been really helpful for us is to ask for introductions and like warm introductions. You're way more likely to get a response if someone actually knows the person who's introducing you instead of a cold email. So we've really leaned on that. And so, for Nyoka Design Labs, we're developing a like non-toxic bioluminescent based glow stick. And there's industries that like I've worked in terms of clean tech. I love going, to festivals, for example. So that was my area of expertise. But through customer discovery and through some market research, which again would highly recommend, we found there are so many other applications that are really like an industrial use case, like such as in the marine industry, which I think is part of the reason why I'm here today. And so part of our work, and I think that kind of ties into you being flexible as a founder, is if you identify that there's other markets and other opportunities, then it becomes your task to really reach out and get as many connections as possible with those type of customers. And so what's actually worked out really well for us is that there are a lot of services in Canada, for young entrepreneurs. So for example, when we identified that the Navy was a potential user of our product, there's a Naval Innovation Center, and it's actually their mandate to help people, and they have to respond to emails. They actually can't ignore you. So there's a number of resources like that we've really leaned into to get warm introductions, to understand the industry better, and to kind of work with a lot of the services that the government, has set up for businesses. So there's a lot you can do. And I would say, like, you know, if you're emailing a few people a day, whether that's in LinkedIn, whether that's, you know, potential clients, you're asking for an intro, if you're at an event like this and you think that someone might be able to help you, it never hurts to ask. And, you know, even if you get one intro to a potential client, like that could be the keystone for you. And, you know, some of our best clients so far have really just found us online because they were Googling for, you know, the solution that we were providing. So I can't highlight that enough to really work on your website and your key terms, because it's, I mean, that's someone from like NASA's Jet Propulsion Lab, you know, got in touch with us because they were Googling a non-toxic, you know, solution for glow sticks. So it's just incredible. If people are looking for you, then that's also such a powerful point that you can bring up in potential investor conversations. You know, showing that there's a demand for your product through inbound leads can also be a really powerful talking point.
Thanks, Paige. And again, I think that was a great answer, and everybody should have written those things down. You really can't overestimate that you or somebody in your team really needs to become knowledgeable in the space you're in so that you can build that trust. And then all the networking events and networking that Paige talked about. So thanks for that, Paige. So Bill, shifting a little bit. So we've talked about, you know, hopefully you found somebody that you've got a warm connection to, that you're ready to sort of do some discovery with. Can you talk a little bit about the type of questions that you've asked that have been successful kind of getting the information? Like, for example, you can't just walk through the door and say, look at my great gizmo, how much would you pay for this thing? You know, you've got to really, you know, ask questions that are going to give you the information, you know, that you're looking for. So Bill, looking for your experience on how you craft those kind of questions.
Yeah, for us, the crafting the question is very important. What do you want out? What the information that you want to get out of the discussion? So with every conversation, with every customer, you have to come away with not just a qualification of that particular customer, but it sets you up for the next customer that you talk to. So it's the conversion, the rate of conversion of customers should get better the more conversations that you have, if you're asking the right questions and getting the right information back. I'd like to actually turn it a little bit differently in that today our biggest sales are in the way that we're selling equity in the business to finance it. And this is an area of sales that will involve every company in a startup phase that wants to grow. And so the questions are not so much in the specific to the market, but in general, and in finding customers that want to purchase equity in your venture. That's a different set of questions, but the same rules apply. In that case, they're looking for different answers, which include market dynamics, obviously, but other ways, other questions around management and that sort of thing. So what we tend to do is to seek customers. Every customer is different, and go in scripted, because you can't free flow these kinds of things. You have to have a script because you want to come away without wasting your time or your customer's time. So I highly recommend a lot of prep work when you're going towards a customer to make sure you're getting answers to questions beyond. Obviously, the goal is to sell to that customer eventually, so you have to be prepared to answer specific questions. And the other thing is transparency. What we've learned in our business is that it's because it's a new business, we're delicately moving in a trajectory that demands collaboration, and it demands honesty and openness in the discussion. And that way you'll learn the most. So you have to be prepared to give up some of what you keep maybe close to your chest. You have to be prepared to give that up. What we find we learned most in talking to other folks in our industry by saying, look, we're collaborative. We'll tell you what we know, and hopefully you'll do the same. And it has been a great dialogue. Other folks want to play their cards way close to their chest. We don't get as much out of those folks. So I think bottom line is script it well to make sure that you're able to convert and learn from every customer call that you make. Thanks,
Bill. Really interesting answer. Obviously, investors are customers for equity rather than your product or service. So it's a good reminder that it's a lot of the same disciplines. I really like your thoughts on know what you want out of it, and then you can reverse engineer the questions so that you start a conversation with that end goal in mind. So I think really, again, some great wisdom for everybody. Okay, Jess, back to you again. So what about common mistakes? You know, in hindsight, you know, we all make mistakes. You know, what would you have done differently? Or maybe tell us a story about, you know, a question or something that misfired.
So far,
Jess has never made a mistake. He's having a hard time thinking.
There is not a single day, right? Like there are tons of mistakes we make in early days. About product, I wouldn't say we made any like major mistake. It was more about like improvement, right? Like iteration upon iteration. But as a like entrepreneur in this business, we made a mistake of like not structuring the business the way it should be in early days. We hired a local mom and pop shop lawyer to structure all the corporate stuff and everything, and then we figured like, oh, it's highly complex, and like in long run investors wouldn't like even touch us, or like it's gonna be tough even for us to grow this business based on the structure, the way it's been structured. And while writing some investment documents like SAFE that we used to raise capital, we didn't use a lawyer in early days. And one of the it's a crazy story. We were raising like pre-seed round from friend and family, and somebody reached out to us, and the person was like, yeah, you know what, I have met your co-founder once and I love what you guys are doing and want to write this $25,000 check. Let's go for a coffee and just chat out everything that you are doing. And I was like, wow, that's amazing. Like usually it's like a lot of legwork to get any money from anybody. And when somebody comes out of blue for the first time, you never met the person, and the person says like that person has met your co-founder just once and is willing to write $25,000 check, is like a big stuff. And so I went out for coffee. We talked about like for half an hour. The person was like super excited, writes a check, and things don't go the way it should go in her mind. And the person decides to like, the person asked for the money back in the most critical time when we were like almost at the age of like raising another round. And when we are doing the second round, the goal is to like get some funding to grow the business, not to pay out somebody else, right? Like it's a huge red flag for investors. And we had like almost no money in our account, and we decided that, you know what, we're gonna do something. We're gonna pay this person out. We don't have any money in bank after this withdrawal, but we'll figure something out. And that one mistake of not hiring a lawyer and not understanding from whom we can take money and who we can't take money from could have killed our company. And so knowing all the stuff at the corporate level in early days makes a like huge difference. And now that we know better, we have a set criteria of like who we take money from and who we don't take. Sometimes it might legally make sense that, oh, you can take money from this person, but we don't want to take money from the person if we don't feel that there is no right fit between the person and the company. So that was like a huge mistake. And literally that was like 150,000 rounds that we did. And we spent like 80% of that on inventory and the marketing and everything. We had only $15,000 in account left. And this person was asking for $25,000 back and 5% interest on top of that. And the person did a little bit of support to us here and there and was asking for that compensation. So was asking for about $35,000. And so we would be minus $20,000 after paying that person out. And there is no way company would have survived, but we survived. So I think that was a major red flag. And now that we know, we wouldn't make that mistake again.
Yeah, thanks for sharing that story, Jayesh. I think all of us entrepreneurs have had those arrows in our back and wish we had known differently. We got into various situations. So thanks for sharing that. Paige, I'm going to jump to you next. And, you know, what investors, you know, really start to care about is how you price your product and the sort of margins and how competitive you are. And of course, that's a challenging conversation to have with a prospective customer. So maybe you could help us, describe how you sort of thread that needle between trying to really get a frank assessment of what a willingness to pay is.
Definitely. And do let me know. I've been having some issues with my microphone. So if I start sounding like a robot, just let me know and I'll reset my mic. So yeah, that this is kind of, it's kind of that critical question, right? Like, what will someone pay for your product? Are you going to be a profitable company? And I mean, at such an early stage, it can be such a question that puts you on the spot because, I often will really want to talk more about economies of scale and how we're at prototype stage, and this isn't the final cost of the product. But so I think that in terms of even framing that question, it's nice to have some statements that you're ready to talk about. Where you're like, currently right now, our competitors are priced like this. Here is where we currently compare at a prototype level. And here's how we expect the price to change at scale. And here's what we're doing right now to prove that people will buy it, at our target price. And if there's people who are willing to buy your early product at a higher price, then that adds a lot of trust that people really care about purchasing your product. And so what we actually did to, get going and start, we launched a Kickstarter campaign for a really overpriced product. And we framed it in a way that, the benefit was helping us get going and proving that market traction. And so we had a successful Kickstarter. And so we were able to move forward with that. And so that was it was a bit of a risk, but it came with quite a high reward. And currently now, where we're at with our production is we're doing small batch prototyping in-house. And of course, the cost is not as great as it will be when we're making hundreds of thousands of units. So when I answer that question, usually what I'll tell a client, this also goes back into your understanding of your market, because what we've identified, at least for us, is that there are kind of early stage adopters that will pay quite a premium and just think that what we're doing, is worth paying that extra for. And then there's other sections of our market that are very price sensitive that we would, know we would not be able to sell to until we are at that volume. So it really actually has informed our go-to-market strategy in terms of where we know that our product pricing is, knowing that we don't want to be losing money on every sale that we make, and understanding then where we can focus our marketing initiatives in the short term, near term, and then long term. Even understanding for your products if there's certain types of certifications that you might require, and building that into your timeline, and then knowing where to focus your energy. So yeah, it's not a simple question, but if you do have in your hands, your current price, how that compares to your competitors, and where you expect the price to go when, you are whatever your service is, if it's a product, if it's a service, if you do have an understanding of how that could change over time, then that can become quite a compelling narrative. And there's so many ways that you can back up that narrative. There's industry reports. Something that we use is, there's bioprocess development reports about commodity chemicals and how their cost has decreased over time. So that's something that I make sure that I'm able to talk about. So it's not just us saying things will change. It's also it's backing up that narrative with case studies, with other companies that have done similar work. And so you can really then construct a believable narrative that isn't just, you kind of talking about what you want to happen. I ideally never say oh, I believe this will happen. I say this is what we expect to happen and here's why. So yeah, as much research as you can do to back up your pricing if it does change over time, would really highly recommend spending some time on and really figuring out at what stage in your product development, if there is an early market that might have a lower price sensitivity, to focus on that before working with potential larger clients. For example, the government is quite known to be very price sensitive. And so we put that as our later term target market, for example.
Thanks, Paige. That was a great answer. I really like reminding everyone that generally everything you make has got different use cases. And some of those use cases will be highly price sensitive and others won't. And so fight your battles at the right time. And the other takeaway I got from Paige's comments is you really got to be able to defend those statements, because investors are not only are customers going to want to understand how you can hit a price point that works for them, but investors are going to want to know that too. So you can't just say you hope and dream that it'll get there. You really need to be able to defend it. So thanks, Paige. So Bill, you know, the product development and go-to-market journeys can take some time, depending on the nature of your product. I mean, it can take years, especially if you've got certifications and things that have to happen. So how do you stay engaged with those early customers that you talked to that gave you confidence that you had the right product market fit? What are some of the techniques that you use to sort of stay in touch with them so they don't say, Bill who, when you're finally ready to go to market?
Yeah, it harkens back to my earlier comment about being transparent. When you have initial conversations, under promise and over deliver. That's a key mantra. How that translates into practice is if you set yourself some milestones, realistically and time-wise, and you have early conversations with customers so that they're aware of your timeline, then they're always interested in engaging you because you're being authentic every time you go back to them. Yep, here's where we said we would be, here's where we are today. And that way then clients in general, customers, including investors, they want to know that you're speaking truth to them and you're being authentic and realistic in your timeline. If you continuously go back with positivity, positive information, that's great. That's excellent. But you don't always have that opportunity. So never be afraid to go back to them and say, look, I was talking to you 2 months ago. We've hit a slight snag in the road. I'm going to be back to you in 2 months when I thought I would be back to you in 1 month. Hope that's okay. So don't be afraid to share. Maybe it's not 100% positive news. Maybe there's some bumps in the road, and customers understand that. And I think respond to that. If I could take 2 seconds to respond to your early question, though, Peter, because I want to do a plug for Cove Sea Spice hitting the markets this week and next week in Whole Foods. Price validation is extremely important when you're in consumer packaged goods. And if I had a nickel for every investor that told me, stay away from consumer packaged goods, it's a nightmare. What we did was we found an expert, somebody that had been there and done that and knew the intricacies of how to get a good food product into consumer packaged goods. That helped tremendously because we knew we could leverage the mistakes of that individual in their early part of their career, and we wouldn't have to make the same mistakes. And as a result, pricing is a little more intuitive than you might expect. So, for example, our products are first going into a range of grocery stores, from the bespoke small ones to the larger chains. And we can put, because of the way supermarkets work, you can put a different price in every place and judge the uptake. Whereas if you're going direct to consumer, you really only get the option to put one price on your web page, and you got to hope one size fits all, because one size doesn't fit all. So there's a couple of lessons that we've learned along that road.
Thanks, Bill. Excellent stories. Excellent. Okay. Jayesh, this is a sort of pivot question. I mean, the one you go, you got your idea, you go to the customers to try to get validation, and sometimes you don't get validation. You get the opposite, which is the original idea does need to pivot. So you talked about packaging, for example, was one of the things that you learned early on in the process. Maybe talk about what went through your thought process as you were gathering information. How did you make that decision to pivot? Because, with entrepreneurs, there's a balance, right? You've got to be prepared to be persistent and in the face of every kind of imaginable problem you could come up against, and persevere. But, there's a balance there, because you might be getting some terrific insights that maybe would bounce off of you if you didn't have that sort of openness. So maybe just share some of that pivot story with us. Oh, Jayesh, you've got us on mute.
Oh, yeah.
That's better.
I think it's important that we have some sort of fundamental tool sets that we use so that we stay consistent about how we go with changing the strategy or pivoting or anything. Every time you do that, you stick to your tools rather than just emotions, because many times you will be talking to someone and there will be many negative feedbacks, and there will be many positive feedbacks as well. You can't keep switching from positive, negative, and switching your products, right? And so I think building hypothesis helps a lot. So for example, I would be like, you know what, this is the product, this is what we are trying to achieve. And if we achieve this, and this thing, it means it works. And if you receive anything other than those results, it's a negative. And at those moments, you should be ready to like try something different out, because your hypothesis clearly suggests that you failed or your product failed in that particular case study. And so there might be different options that you have to look out for. The great example would be like when we launched our company right before COVID, although there was like 1 year went into like planning and strategy and everything, nobody knew that we were heading towards the COVID-19 in 2020, right? And we launched our company on March 16th,
Oof.
2020, right before COVID. And initially our business model was 1 for 1. So every time somebody buys a product, we donate one product, because the statistics suggested that 1 in 3 young Canadians can't afford safe menstrual care products. We entered into market, and so many NGOs immediately started reaching out and were looking for products, and we realized that the actual need is way bigger. And NGOs have some funding that they can use to buy our products and everything as well. So we immediately switched gears and built a different pricing for NGOs so that they can buy products. And for first 1.5 years, it was a slow growth for the actual persona that we built, that this is the person who will be buying our products. In meantime, NGOs were buying our product consistently, and that kept us afloat. And so that pivot actually helped us survive while we were growing our actual business, that we were hoping that, okay, this is the 35-year-old person with this much income and these problems who will be buying our products, because it's a very sensitive product, and there is a trust factor that has to go into it before buying menstrual care product, because it's a very intimate product. Not everybody will be like, oh, there is a new product, let's try out. It's not a biscuit that immediately, oh, didn't test well, just throw it out, we won't buy again. There is a huge risk, and so people won't buy this product immediately. But as the NGO started picking it up, we got more customers, more institutional customers like universities and schools who wanted to buy these products for their audience. Like University of Victoria, where I graduated, buys our product and puts all those products in their washrooms. And that way, like there are like 3 other institutions reach out and 7 other NGOs that started buying this product. So maybe your initial persona or the customers that you thought would be the biggest customer might not turn out to be your biggest customer. And so now you have like a whole new strategy that you have to figure out, like, okay, how can we sustain this business supporting this customer base rather than just focusing on what we thought initially would actually bring the most value to the business. Doesn't mean that you have to completely switch between these two sectors, but play your cards right, support the biggest customer who is available right now, and build your products for the next phase of the growth for the customer that you thought would be the right fit.
Yeah, thanks for that, JS. That's a neat comment, not so much about pivoting the product, but pivoting the channel and the end customer.
Yeah.
So going from a business to consumer model to more of a business to business model, like you said, an NGO or an educational institution. So very, very cool comments. Thank you for that. So then Paige, you sort of touched on this on a previous comment, and this is one where, again, the journey is long, right? So when you're doing customer discovery, that's generally at the front end of your business, and yet you need money. And, you know, you're probably not in revenue yet, or else you're just doing, like you said, you know, small prototype runs. How do you give potential investors comfort that these sort of customer discovery sessions that you're doing are sort of fact-based and do validate, you know, your assumptions on product demand and pricing? And maybe even a slightly more detailed question, how often do you take customers and put them in front of investors, which can be good and it can be bad? Just sort of curious as to how you take these customer discovery conversations and weave that into your investor pitch.
Yeah, thank you. I've been doing a lot of pitching recently, so this is a question that I'm constantly thinking about. For an investor pitch, what I found to be very compelling is if you have, you know, like 1 or 2 really high level, you know, recognizable clients or case studies that you can point to that really show that there's like a lot of value in what you're doing. I've received mixed feedback on some of our early revenue and traction actually, because how we've got started as a company was, to do like I said, small batch runs, work on developing our internal capacity, to service larger clients. And so part of that early work was to put up an e-commerce store, and just work towards selling in that channel. And yeah, I'll be honest, there's definitely been mixed feedback around that, because then the question is, are you a business to consumer company? Are you a business to business company? And in terms of, I would say basically every single conversation I've had with a potential investor is that companies that, serve industries and are business to business are much more attractive as an investment. So even if you can show that you have early revenue and early traction and there's demand, anything that points to something being a longer ongoing contract, maybe there's like an essential need and problem that you are solving for an industrial level client, is absolutely the most valuable, even more so than, getting some early revenue, which I know was a big learning for me last year, where I was, on one level, it's obviously great to be getting revenue, because then you're not just operating on grants, friends and family, early stage investment. There is some money going into your bank account ideally. And also you can start to really build a business model around some of those financials. It also does allow you to work with suppliers, really build out your supply chain on one level as well. So in terms of your company structure, I still think there is, quite a lot of benefit in starting small, testing products out with a not super high level client in terms of, direct to consumer. But in terms of the investor side of things, I've really framed that early work as, this is our testing ground. This is where we're testing our products. This is where we're getting early feedback. There's been some really good actual learnings through that then we're applying to our work with, potentially larger clients, which are more business to business.
Yeah,
So-
thanks for that, Paige. I really think that's a neat way of framing it. So those early customers, like in an investor's mind, not all customers are created equal, even though from
Not
your
at all.
perspective. But it's nice that you frame some of those early customers that may not be super attractive to an investor as really the teething customers that allow you to work out the kinks and necessary. And hopefully behind those, you have the other customers that are get investors excited. So thanks.
Exactly.
For sharing
Well, and what
that.
I'll say too, even to become more attractive to a larger client, having those early customers, maybe they send you photos, you can ask for testimonials, you can talk about their experience. So even if that's not your ultimate business model, getting a lot of that early, work and experience with people who real people who are using your products, who also are way less risk if you have a product failure, for example, or something isn't quite working in how you tell people to use it and they're confused. That has been great to do with individuals. So that way, when at higher stakes and you're working with a business, you've hopefully worked out some of the issues with earlier stage, lower risk clients.
Excellent. I'm going to have one more question for Bill, because then we'll have rotated around, I think, 3 times. But the questions are starting to pile up. And so, Natasha, if maybe you can help after I've asked Bill this last question, if I'm not sure how you're going to curate these questions, but we're standing by to suck the wisdom from our panelists. So thanks. So Bill, this is maybe a little bit of a delicate one. And, what I found in some of my careers is inside the customer, especially when the customer is big, there's all kinds of silos and departments. And how do you qualify that you're actually talking to somebody who, can actually do something? The example I like to use is the lab rats. So you've got a technology product. One of the first things you have to do is to get it tested. And sometimes in some organization, the lab is really isolated from the business. Nobody listens to the lab rats that are in there. So even though they've tested your product, you never really come out of the lab. And others, the lab is really tied to the strategy of the business and they get listened to. And so if you're successful in the lab, then you're successful with commercialization. I didn't just want to use the lab, even though I know you're in a product that's somewhat suited to that, but just help us understand how you navigate the sort of customer hierarchy and politics to make sure that, you actually get real life traction after conversations.
Yeah, I can refer to another business that I have where a small, independent supplier based here in Vancouver Island, to the Bombardiers and the China Rail Rolling Stock companies, where you're very small and you never know if you're knocking on the right door. So trial and error is one really important point. Most of the times, if you have any connections into the industry associations, you can ask specific questions of industry associations, because many folks there, they don't have a vested interest necessarily in exactly what you're doing, but have the wisdom to have gone that route before. In corporations like the former Bombardier Transportation, there was the buyers group. There was the folks that were interested in innovation, and they're not necessarily sitting in the same group.
Yeah.
And then there's the purchasing side, you get handed off from the buyer to the purchaser at the end of the day. You need to make sure you've got a great working relationship with the purchaser, because word will spread in the organization if you're not delivering when you say or being transparent. And also be courageous. If you can easily ask the question, hey, are you the right person that I should be talking with? If not, can you suggest somebody that we would? And most people, if you're an enthusiastic vendor and you may have something down the road, even if it's not today, that you may be able to offer them, building that interpersonal relationship and asking courageous questions will never set you wrong.
Thanks, Bill. Those are some great insights. Thank you. Okay, so I'm looking at my clock here. We've got about, I think, Natasha, we've got about 10 minutes of the Q&A session before we jump to an informal session. I don't know, in my computer, I see a lot of chats, but it's hard for me to figure out exactly, which ones to pick on here. So maybe you could help if there's some sort of common questions you could help us with.
Sure.
Navigate.
Happy to read a few out here. So kind of wondering, thinking about, at the earliest stages, if you're an idea stage entrepreneur, can you help us understand how those idea stage entrepreneurs can demonstrate that proven market interest at those earliest stages of a startup before they may have a product, or even really have identified a price point to really discuss to sell?
Yeah, so Paige, why don't we pick on you for this one? I think maybe it was relatively quick. You were able to produce your product. So I'm maybe you could talk about that website that you set up initially.
Yeah, I mean, we set up our website after there was a patent filed. So, if you are going the path of protecting your innovation with intellectual property, just watch out for that, because you'll have, a year from data public disclosure to file for any intellectual property protection. Just make sure that, if you're at the idea stage, that you're aware that there is a time limit as soon as you do any kind of public disclosure. But provided that you've, thought of that, are prepared, then any kind of, putting a website up and then getting a little bit of media attention, ideally in channels, that are related to the customers you're trying to talk to. It basically just helped us start building an email list. We had some really early renders, an idea of what it would look like, and a really, really awful looking proof of concept, that made it kind of believable that the product would eventually, come to life. So that's really all we got going to start with. And one interesting thing that happened with Nyoka is we were actually, so we were solving for one side of the problem, which was the single-use plastic, toxic products that we're trying to displace. But we were solving for that, trying to make a almost analog made of completely sustainable materials that were biodegradable. But then we were getting requests for a reusable version as well, which was not in our initial product development at all, and something that we actually then mobilized to create, because we were getting so many customer requests for something like that. And luckily for us, that product was a lot easier to make, a little bit less protected and innovative on the actual long-term journey of our company. But that has enabled us to really move forward with early sales. And what we found is that a lot of people that were interested in that product are also interested in the kind of more longer term vision of the more development heavy product that we're working on. So having that kind of strategies worked really well for us, because now we're already clients You know, and have worked with, we're like setting up with a distributor right now. We're able to actually ship something. So it is about, again, like building that trust. And so what, I mean, it's something to think about. If there is a simple version, or like, again, a kind of like the difference between a most lovable product and a minimum viable product is what we were kind of struggling with in that early stage. And so we had a very terrible minimum viable product of, you know, the initial idea that we started with. It was not even close to minimum lovable product. We'll probably get there by this year with our bioluminescence development. But what we were able to do in the interim was develop a product that really worked. It's not, you know, the ultimate goal of what we're developing, but it is something that people really enjoy using. It works for a smaller segment of the market, but we've been able to get a lot of mileage developing that. And it's, you know, it was cheaper, it was easier to develop. You know, we were already connected with some suppliers that we're now working with. So just something to consider, like if you're at the stage where you're realizing that your development timeline is really high, but you're getting a lot of requests from clients who are looking, you know, for maybe something different, and kind of falling in love again with the problem that you're solving instead of the solution that you're building, was a good piece of advice that I got at an early stage, you know, and I think has really carried us a long way. So that's kind of answers that question, I guess. But
well, I think, you know, I think like you described, I mean, you had nothing other than a patent application, yet you still put up a website, right? So I think that really answers it. Even if you don't have something, you can still start that customer discovery process. Don't be shy. So thanks for that. Natasha, I think I found another question here. This is a question about how can you price a product before you've actually prototyped it? Bill, why don't we throw this one over to you? And you know, how do you, you know, I guess the question is you've got to start, you know, on the one hand, you want to sort of ask customers what they think, what they're prepared to pay, but you also have costs, right? So you've got to be able to, you know, price the cost at some time. So just curious on any answers there.
Yeah, if I was going to start with a blank slate, which before Cascade was founded, that's what we did. I was fortunate enough to be able to was contracted by the Vancouver Island Economic Alliance to build business cases from scratch where Vancouver Island had a natural competitive advantage globally. So it was a blank page. And one of the techniques that I've used in previous careers is to assess a market, divide it up. You got a thought, you got an idea of what you want to bring to market. Ask yourself the question, is this a substitute or an imitator? Because there's very different routes to market and very different pricing strategies. And I think it was a Harvard Business Review paper probably 15 years ago that talked about those various strategies, and pricing does come into it. So that's one place I would start asking myself the question, if I have a product idea, am I going to replace something that exists, or am I going to be an imitator? And that's a great place to start in asking yourself the question so that you can frame up where the pricing sits. But I think pricing would be one of the last things you'd want to think about. It's where it sits in the market landscape to begin with. And it speaks to proven demand as well. You won't have that option. If there's no product existing like it, you won't have that proven demand. You won't even have a demand in inception. So I would start breaking it down, build some thought experiments, build a couple of matrices where you can rank the idea or the manifestation of the idea in different market spaces, and start to be a little more analytical as you frame up the question.
Hey, thanks for that, Bill. This pricing issue is a real vexing one. I thought I would pass on a story. This is what you'd really like to be able to do, is price to value, so that the value that you're bringing the customer, you price it accordingly. Unfortunately, most of us are in markets where the competition doesn't quite allow you to do that. You end up pricing to costs and really working on costs to see if there's margin in there. But be on the lookout, especially if you're in a startup. If you are in a price to value situation, you may find that you can get extraordinary pricing when you don't have competition. I was in a market business like that, where we were pioneering a certain type of technology. There really wasn't any competition, and we priced it at, 1,000 times cost. forget 2 times cost or 0.5 times cost. I mean, because of the value it would bring the customer. So just be on the lookout if you're in one of those rare situations where you are unique and you are bringing value. You should price for it.
And there's the concept of net buyer benefit as well, which is the differential between what a customer thinks the value is, but what the customer really wants to have the product, because customers buy on wants not based on needs. So what the customer is willing to pay over and above what they perceive the value because they really want that product.
Well said. Okay, so I'm looking at my clock here, and I think we're coming up on the time where we shift over from Q&A to the meeting room session. So Donald or Natasha, can you maybe help us with what's next? If that's the case?
Yeah, no, I sure can. And before we do that, I just want to say a huge thank you to you folks. This has been one of my favorite formats. You have 3 relatively earlier stage companies and founders, and this very experienced moderator who is able to navigate through all of this. So really, really appreciate it. It's been just an excellent, excellent conversation, and hopefully all of those listening got something out of it. And I'm guessing, and you folks can shake your heads or nod, that all of these people would probably be open to getting an email from anybody on this call if you have anything further to follow up and ask about, because I think one of the great things about this ecosystem is so many entrepreneurs are interested in helping other early stage entrepreneurs and find their way, and helping them not make those mistakes that all of us make in those early days, and helping to avoid those goes a long way for us to really build out certainly the ocean sector, but innovation in Canada generally. So really, really big thanks to you, Peter, and to all 3 of you wonderful founders who are having great success. So now, Natasha, I think we're going to move into our networking session. So I think what will happen is Natasha will open up some rooms, and I believe all 4 of you will be in your own separate rooms, and people can come and go as they please and jump into rooms and have conversations with you and others and try and build some networks. So